All right. Hello, everybody. Welcome back to another episode of the Market Close. I am not late. I don't know why everyone spams late at 3:45. I think it's because you guys all expect that I'm going to be here at 3:46, but I am on time. It's 3:45, not 3:46, not 3:47. We're here. We're live. And we got a market to close in about 15 minutes. Nothing that crazy happened since I've been gone from the market open, quite frankly. We'll talk about silver. We'll talk about gold. We'll talk about the equity markets. Relatively flat. I mean, you're seeing some strength in some names that were down during the morning. And like the S&P 500 in general was down, I think, at the worst 0.5% of the day. Now it's down 0.32%. I mean, realistically, the volume is back. You are seeing a lot more volume than what we saw on Friday. But you're not really seeing that much momentum up or down. Zeta was down 4%. Now it's down about 2%. So decent recovery right there. TSM down about 1%. NVIDIA was down, I think, 2.5% at the worst today. Now it's down 1.3%. Google's flat. S&P relatively flat. Bitcoin, it was at 87.5 in the morning. It's at 87.1. It's down from 90,000 last night. But, I mean, there really hasn't been that much craziness that has happened throughout the day. And so we'll talk through a few headlines, but I kind of still feel, and I think a lot of other people are getting this vibe as well, Tesla down 2.6% right here, that although volume is there, the volume is not really conclusive of anything meaningful, because at the end of the day, there's still probably a lot of people, retail investors, hedge fund managers, institutional money managers, that are on vacation or their year is done and they've booked their profits for the year. They took their tax loss harvesting for the year and they're not really focusing on the markets for the rest of the week. And they'll get back to it in 2026. So the next couple of days might be a continuation of the same trend that we've seen basically from Friday, even with higher volume. And quite frankly, if this is the nature of our Santa rally, which is we end out at around 690 on the S&P 687, I mean, it's not the worst thing in the world, but it might not be that jolt of fire that we need to get back to 7,000. And so we're going to see, but didn't have a crazy day. Didn't have a crazy day on Friday, not a crazy day today, and maybe over the next 2 days, it's not filled with that much momentum if people are waiting for 2026. The actual most important news of the day is your boy is officially a medium rare steak eater. That's crazy, dude. If you said, Amit, you got to eat that a year ago, no, there's no way. There's no way. Like, I liked it. Got a nice little porterhouse for two for myself and Mr. Steven Fiorillo. And I enjoyed it. I really did enjoy it. I had no qualms about eating it. Look at Steve with our nice dessert right there. Look at Steve all dappered up, looking nice. But no, I'm a medium rare guy. I officially am a medium rare guy. A year ago, you would not get me to even touch that. And now it's the norm. So your boy is medium rare. I thought it was special being a medium well guy, and now I've turned over to medium rare. So that's the big story of the day with steak preferences. So no one can make fun of me anymore. See, now everyone's like, oh, that's raw. Like before, a year ago, it's like you don't know how to eat steak. Now it's like you're eating raw steak. Can't win. But it's good, dude. Like it's like I don't know how I was eating medium well before. Like medium rare is how you eat a steak. Like quite frankly, that is how you eat a freaking steak. That is how steak should be eaten. And I guess that's how I'm gonna be eating steak for the rest of my life. All right. So what headlines do we have? Well, first of all, let's talk about silver. Silver. Okay, so this was the conversation of the morning, right? Which is, do you go short silver? And my perspective on this is simply no, because I don't know if the trade is done, nor do I know if I'm smart enough to call the top of the trade. Silver bottomed this morning at 63.90. It's at 65.78, at least on SLV, which is not exactly tracking silver one-to-one, but it's a good proxy for it. Silver itself right here is at 72.59, so down about 8.4% of the day. At the worst of it, it was down about 11%. Now it's down 8.4. Still an ugly day, but if you shorted it when it was down 9, 10, or 11%, you're underwater on your short. If that was the bottom. Gold down 4% of the day looks insignificant compared to silver, but also that's pretty ugly for gold. So the question now becomes, is this just a hiccup in the silver trade? Silver's up 140% year to date. Is it taking a little bit of a breather, down 10%, which realistically any stock that was up 140% year to date going down 10%, you would say that's a normal breather. That's probably healthy for the stock to consolidate and take a little bit of a break. The problem is precious metals don't go up 150% year to date. One could be arguing that entire run was a bubble, which I don't think that's necessarily the case. Maybe it got ahead of itself. I don't think it's necessarily a bubble because of the reasons we talked about over the past 48 hours around the rise of silver. But is that enough to say silver is now consolidating and normalizing a base at 70? Whereas previously, I think the base was closer to 45.50. Because if that's the case, it's not a short. It's just normalizing either for the next leg up or to stay flat, but you need it to go down if you want to make money on the short. It cannot just stay flat. So I still think you need some more evidence here. And realistically, the time to short was on Friday, not after it goes down 10%, because the premiums you're paying, I think, are just a bit elevated, unless you think this thing's coming back down to 50, which maybe it is. But the dip buyers have stepped in. They've not stepped in as aggressively as probably most people would want them to step in, but they are indeed buying some silver. Now, palladium, on the other hand, that thing is crazy. That has had a 17% intraday swing to the downside. It's on track for its largest decline since April of 2022. Platinum as well, I think, is down about 10% on the day, a little bit more than 10%. So you've seen some of the other metals outside of silver and gold that have got hit pretty bad today. And a lot of them seem to be following what's happening with silver. So again, I don't know if it's easy to say this is the top and this is where it's time to take some profits or go short. I definitely don't think this is the easy opportunity to be like, well, this is my dip, I'm going to go long. It's like you're really stuck between a rock and a hard place if you're not in the trade, which is why staying on the sidelines, as boring as it is, might be the smart thing to do here when it comes to silver. Bitcoin, are we losing 87? We just lost 87. Just touched below 87,000, so that one continues to get a little hit as well. BMNR was doing well on the day. Now that one's barely up, 28.45. At least it's up a little bit, but it was up 4% on the day when Ethereum was closer to 3,000. Ethereum right there, 29.20. That's down 4%. As Bitcoin once again plays with our emotions, that's a $3,000 candle officially. It was 90,200 last night, and it is now below 87. It's just back and forth on what we've got for Bitcoin. So 86.98.2 for Bitcoin. Hood's down about 1%. Coinbase was green in the morning. Coinbase is now down about 1.4. VG ended up going red on the day. And then you have the S&P 500 right there at 687.91. So let me know in the chat if anyone is buying or selling silver or any of the precious metals here. But I just think we need more weeks of data to figure out what the price action will look like. You guys saying Trump is live? I don't see Trump live. He is live. Okay, let's pull over to this real quick. See what they're saying. We'll go he's with Netanyahu. When they actually talk about, when they take Q&A, I think that'll be better. We'll hopefully get some other questions around the economy, but let's just go to this real quick.
A great friend, and I've been a great friend to you and to Israel, and it's been my honor. And the award that I was given was really surprising and very much appreciated.
Well, President Trump has broken so many conventions to the surprise of people, and then they figure out, oh, well, maybe, he was right after all. So we decided to break a convention too, or create a new one.
Okay, so we'll go back when they have Q&A. We'll see if we can get some other answers. The meeting they had today, I saw very briefly the headlines with Trump and Netanyahu. Elon is going to be going to Israel, if I'm not wrong, as well, and participate in a conference. But yeah, Elon will be at a global AI technology conference in Israel. From my understanding, the meeting today with Trump was like an end of year meeting to deal with like the framework for how to approach 2026. And we didn't watch the press conference, and I think it's getting close to end. So I'll try to get the summary of what they discussed. But as per what Trump said, it was a relatively successful meeting. And so I guess we'll get some updates later and see what happens. When we get to Q&A, we'll see if we get any other questions about other stuff that's going on. In terms of Venezuela, I do think there is an update on that. We have officially engaged in some deeper strikes as of this morning. Yeah, here it is. So let's look at this clip right here as that part of the conflict with Venezuela is not, well, it's definitely not slowing down.
Can you say more about the explosion in Venezuela that you mentioned in the video interview? Did the military do that? Can you share your details about
Well, it doesn't matter, but there was a major explosion in the dock area where they load the boats up with drugs. They load the boats up with drugs. So we hit all the boats, and now we hit the area. It's the implementation area. That's where they implement, and that is no longer around.
Is that the only strike that the U.S. has done?
I don't want to comment on
President.
All right, so Trump confirming that there have been some strikes, not giving you too many more details. So this is on top of the geopolitical stuff that we had to deal with in the morning. So Trump, Putin, and Zelensky had negotiations last night. They had a meeting at the White House, and they had a press conference with Zelensky and Trump, and the tone of the press conference was, we are very close to a deal. This morning, Russian state media and the Russian foreign minister come out and say, hey, Zelensky just tried to assassinate Putin in his house yesterday. Zelensky comes out and says that this is a fake. This is like, we did not try to do that. The White House said Trump and Putin had a constructive meeting this morning discussing the claims that Zelensky tried to assassinate him. We don't have any other details on if that's true, if that's false, if the White House is defending Ukraine, if they're going against Russia, or like, are they taking Russia's side on this? So we have no further details on that. And that's maybe in Q&A, we'll get a little bit of an answer, at least from Trump's perspective on that call with Putin today. Tesla right here, below 460. She's getting hit bad. This one's actually getting hit the worst out of all the Max 7 today, down about 3.2%. But that further complicates the geopolitical issues that are going on along with what's happening in Venezuela. So I mean, you do have a lot more things that are starting to get, I guess, concerning going into 2026, along with the government shutdown. That is something we're gonna have to deal with as well. Micron, yes, I'm happy you mentioned that. I saw this at lunch. 290 is when I saw it. Now it's at 294. Look at that, 3% on the day. So memory, which was the core reason for why NVIDIA likely purchased Grok last week for $20 billion. Micron now up 236% year to date. Put in the chat if you're long Micron. I mean, you definitely deserve a pat on the back. This was one of the more underrated parts of the semiconductor supply chain. And if you paid attention to it, you've done very well, whether it's on Micron, Samsung, or SK Hynix. But this thing has been an absolute monster this year. I mean, a lot of people are probably looking at this like, how is Micron up 236% year to date? But if you understood the thesis, memory has apparently become one of the crucial factors to building GPUs. So if you're long Micron, Helder says I have Micron at 59. I've been long since April. Trim some, but holding a lot. Long since April. Long since 1994. That's crazy. Well, this is the breakout you've been waiting for. And this is what we're seeing today. I don't have a specific headline for Micron's going up. It's probably based on, if I had to guess, this NVIDIA Grok headline. The core reason from my understanding is around DRAM versus SRAM, and NVIDIA taking a more defensive approach by securing a way to deal with inference that is not as reliant on the three big essential monopolies when it comes to memory. Even though NVIDIA is not going to have a problem securing memory, but they also don't want to pay and deal with their margins coming down. So makes sense that the street's saying, well, Micron's probably got a lot more operating leverage here that they can expand. They already increased their guidance by 100%, $8 of EPS versus $4 expected. I mean, just absolutely crazy numbers. And the street's giving them a lot of love right here, up 3.35% on the day. Also, they're raising their prices as well. So that probably is definitely helping the street get excited about them. All right, we got 1 minute left, folks. 1 minute left. Tesla, not sure why it's getting the brunt of the pain today, down 3.2. Amazon basically flat. Google flat. I think Meta was green. Are we flat on Meta? Meta's down 1%, nothing too crazy. Apple definitely was green, 273, even though it's up a little bit on the day. And then NVIDIA down 1.3. So not sure why Tesla's getting hit the most. Maybe there is a headline that we'll take a look at. But Tesla right there, down 3% as we get into the end of the day. Nebius down 1.7. Iran down 2.25. And CoreWeave, these were all green in the morning, down 2%. Again, the data center play is really stuck in a box. And we're going to need to see some more fundamental momentum around the data center ecosystem, which quite frankly should just be NVIDIA's earnings growth, Broadcom's earnings growth. That should be enough. But that's going to take about another month. Now, earnings do start in the next 2 weeks, but most of the earnings are going to start with financials. And so after financials, we will get into tech earnings. Monday, December 29th. Thank you, everybody, for being here. It is 4 p.m. This is one of the last 3 market closes we will have in 2025. The stock market is now closed. All right, 1 down, 2 left. 1 down, 2 left as we end out 2025. And we're going to see how this ends up playing out. 188.22 down about 1.2% on NVIDIA as we end 1.2% down. We were at around 190 in the pre-markets, but this one is now taking a hit. 1% down on NVIDIA. Nebius right there, down about 1.7%. Iran down 2%. CoreWeave down 1.9%. Google was flat on the day. Amazon also flat on the day. Coinbase down 1.3%. Silver was down about 8.3% on the day. S&P 500 down 0.36%. Again, we are less than 1% away from all-time highs, so can't complain too much, but we have not had a continuation of what we saw on Wednesday. We are seeing a continuation of what we saw on Friday, which was really just not the foundational elements you needed to have this massive Santa Claus rally. Got 2 days left. Maybe it happens, but if not, then maybe we end out the year around that 685 level. Robinhood right there, 117.43. That was down about 0.5% on the day. VG up about 1%. Bitcoin 87.1, down from 90K last night. PayPal was down 0.83%. Navitas was down 2.5%. Zeta actually held up pretty strong. I was surprised today. Zeta fell to like 1980, which is what it's done every time it hit 20, and it rebounded back to 2040. So actually very, very impressed with Zeta's price action today, given it should have just got hit under 20, but buyer stepped in. And this one closed back above 20. Tesla right there, down about 3.27%. Mercado Libre was up about 0.46%. Poet down about 4% on the day. Oklo was down 3.7%. ASTS was down 0.5%. Rocket Lab was down 0.5%. Broadcom was down 0.5%. Grab was down 1%. HIMS was down 0.5%. Uber up a little bit. And then MicroStrategy down 2% on the day. Celsius was up 1.86. Celsius a little green on a day when most stuff was red. How about Lemonade? Lemonade was down 4%. Okay, so insurance got hit today. Oscar was down 2.6%. What about UNH? UNH also down 1%. So most of your insurance names potentially getting a little worried about the upcoming government shutdown or potential shutdown ended up getting a little hit today. Gonzo says, I sold Tesla today. Let me know in the chat if you bought or sold anything today. Or if you are planning to sell or take profits on any position you are massively up on going into 2026. You've got 2 days left potentially to book those gains or book those losses. And the thing about taking profits here is a lot of people might not want to do that because they have to pay the taxes. But you also have a lot of people that might not want to wait a couple of days just in case. I mean, that could be a real thing, especially if you went heavy in a large position and you're willing to take it off the table, even if you're up a couple of percentage points. So let me know in the chat if anything. But Tesla right here, don't have a headline for why this thing got hit 3.2%. Maybe just in general, a little bit of a growth sell-off today. But Tesla taking the brunt of it, down 3.2%. Brian says, I bought Tesla. Frank says, I bought Microsoft. Bottle Fam says, I bought Amazon. Maggie said, I bought Meta. Depot says, I bought AMD and Nebius. Bought Uber, says Jay. James Wing says, bought Nebius, building position. Dimitri says, I bought Nike. Where did Nike close at? This one was green on the day. This one actually green, 61.22. Wow. 3 days in a row of green after those earnings. Maybe this one potentially bottoming. Helder said, I bought SoFi. Amato says, I took some profits on SoFi. This is the nature of the markets, right? Someone has to buy it if you're selling it. And so we're seeing a lot more of these SoFi, Ubers, VGs, Nebiuses, and then Google, Amazon, Microsoft's in the chat. See a couple NVIDIAs, not too many people buying NVIDIA right here. NVIDIA, again, it broke through 192 last week. It has just not been able to hold up. And so you got NVIDIA stuck at this 188 range that you're seeing right here. Melanie says, I got some cash, let a few Palantir covered calls get called away on Friday, bought a little VG today. VG right there, 702 is green as well. Tesla set to report Q4 deliveries this week. Wait, this week they have Q4 deliveries? Is that this week? Actually? I thought that was next week. That could be one of the reasons it's selling off. Maybe it's getting some people getting scared that those deliveries are going to suck and they're not going to be the best. Tesla Q4 delivery numbers. Is that Thursday? Oh, Thursday is New Year's. Jan 2nd. Oh, that's Friday. Oh, wow. So we're starting off 2026 with Tesla delivery numbers. Huh. That is going to be crazy. Remember I guessed it correctly last time at 497? That shit was crazy, dude. That's like, dude, if I could get, I wish I'd freaking taken like a bet on a prediction market or something. That was like, out of all the numbers in the world, that was the one that I figured out. But yeah, this time I don't know if I'll be able to guess it exactly. So 497, expectation last time was like 440. So they massively beat. Stock was up 2 or 3% on that number, and then it tanked as soon as the actual results came out. So, or like as soon as the market opened. So I guess on Friday we're going to see. So what's the expectation going into Q4? I feel like it has to be lower than 497 because last time it was hyped up because of the subsidies, and the $7,500 tax credit that got hit. Street consensus 435. That's a 12% year-over-year decline. 435,000. Okay, so I guess we're going to see if we end up getting 435. Trump tweeted, okay, what did he say? No, this is from last night. This is him tweeting a bunch of news clips about him being the best. And then he tweeted a screenshot of someone criticizing the Obama-Iran nuclear deal. Okay. We'll try to get some more details. Is he doing Q&A right now? Let's see. Is he doing Q&A? Yeah, he is. Okay, let's see. Let's see if we get anything out of this Q&A, and then we'll keep going from there.
If they're doing that, they're making a big mistake. Yeah, please. There's no reason for them to do it.
Mr. President, is the United States currently open to engaging in bilateral discussions with Tehran? We're hearing reports from numerous countries that there may be some discussions. Is that something you would support, or something that is?
I would.
You would support that?
I would. Yes.
Right now. Thank you, sir.
I have been. By the way, before the war, I would support that. I said to him, "Baby," I said, "let's negotiate," and they didn't believe what was going to happen would happen. Yes, ma'am.
China. So China's been doing naval exercises basically to test encircling Taiwan. Can you explain to us what your knowledge is of that? What do you think about that? Have you had any discussions with China?
Well, I have a great relationship with President Xi, and he hasn't told me anything about it. I certainly have seen it, but he hasn't told me anything about it, and I don't believe he's going to be doing it. No, nothing worries me.
But
Nothing.
you said where there's smoke, there's fire, right? So if you're if you're doing naval exercises and air
Well,
exercises.
they've been doing naval exercises for 20 years in that area. Now people take it a little bit differently, but in fact, larger than they're doing right now. So we'll see. But they've been doing that for 20, 25 years. Yeah.
Mr. President, if you don't see Hamas disarm in that short amount of time.
Interesting. So, I mean, he is right. They have been doing naval exercises there for a long time. I think Trump is really trying to keep the relationship with China tight by not criticizing them for escalating the military conflict. And quite frankly, I mean, he probably knows that if he criticizes them, there's only downside right now. So he's trying to downplay it as if it's not the biggest deal. And I guess over the next coming years, we're going to see how big of a deal it actually becomes.
They're giving them. Can you tell us what the next steps would be?
It'll be horrible for them. Horrible. It's going to be really, really bad for them. And I don't want that to happen. But they made an agreement that they were going to disarm. And you couldn't blame Israel. By the way, we have other countries that will come in and do it. They said, let us do it for you if they don't. Countries that were with them wanted the deal to be made, agreed that they would disarm. And now if they say they're going to disarm, that's fine. If they say they're not going to disarm, those same countries will go and wipe them out. They don't even need Israel. You know, we have many countries, 59 countries that are in agreement. This is a real peace in the Middle East. And Hamas is a small part of it, but it's still a part of it. But we have 59 countries that signed on, big countries, countries that are outside of the Middle East, as you know, the Middle East. They want to go in and wipe out Hamas. They don't want Israel. They don't need Israel. They want to do it because it's the right thing to do, because they were for the deal based on the fact that Hamas pledged, they swore that they were going to disarm. Now, if they're not going to disarm, those same countries will wipe out Hamas. Yeah.
President Trump, do you think that the PA should be involved the day after in Gaza Strip, even in the near future? And the same question to Prime Minister Netanyahu.
Okay, so we'll see the summary of some of those questions, but the big thing is on China. I was very curious what Trump would say to that, and essentially he's not trying to critique the Chinese for doing that because he does not want to stoke flares with any potential conflicts that could escalate things in Taiwan, although the Chinese are escalating. We do have a couple of other clips as well. So again, the attack this morning, here was Trump's response when asked about what Russia and Ukraine said.
From President Putin that I was very angry about it. Please. What?
Let me go to this clip. I think this clip would be better.
Have a beautiful lunch, and we'll see you later. I don't like it. It's not good. I heard about it this morning. You know who told me about it? President Putin told me about it. Early in the morning, he said he was attacked. It's no good. It's no good. Don't forget, the Tomahawks. I stopped the Tomahawks. I didn't want that because we're talking about, it's a delicate period of time. This is not the right time. It's one thing to be offensive because they're offensive. It's another thing to attack his house. It's not the right time to do any of that and can't do it. And I learned about it from President Putin that I was very angry about it.
Okay, so Trump right there saying that he was very angry that Ukraine attacked, and he is giving some credibility to those claims and not denying that those claims are fake by saying that he thought it was the wrong approach for Ukraine to do that. Zelensky came out and said that didn't happen. So someone's lying, whether it's Russia or Ukraine, but it looks like Trump is taking the side, at least from a public perspective. Maybe privately he's not taking their side, but publicly, based on how he answered that question, he is criticizing Ukraine for taking that route of action. Again, Ukraine says that they didn't actually do that. Tesla right there, 459. That's still down, continuing to go down after hours, down another 0.11% after being down 3.2% of the day. UNH down a little bit, CoreWeave down a bit, Celsius up a little bit, Amazon, Google, Meta, all down after hours. Most of them were flat on the day. Tesla was the Max 7 that took the biggest hit. California and the new billionaire tax. Let's get an update on that. Here's some coverage based on the policy that Ro Khanna suggested that has started to go a bit viral over the weekend and is starting to get a lot of people to think if they want to stay in California.
Hi, Sarah. So this is a one-time tax that would call for California residents worth more than $1 billion to be taxed the equivalent of 5% of their assets. It'd be due in 2027, spread over 5 years in terms of payment. It is retroactive. It would apply to state residents as of January 1st, 2026, which is just days away. It's important to note, though, this tax proposal, not officially on the November 26th ballot, may not wind up there at all. But it is causing a very public battle on whether or not this will simply kill innovation and cause a talent exodus. Venture capitalist Peter Thiel and Google co-founder Larry Page are considering leaving the state or reducing their California ties by the end of the year, according to reporting from the New York Times. Others, including investor Chamath Palihapitiya, have fired back on X, writing, quote, "The inevitable outcome will be an exodus of the state's most talented entrepreneurs who can and will choose to build their companies in less regressive states." Gary Tan, president of the startup incubator Y Combinator, blasting the proposal as a, quote, "unrealized gains tax that puts founders on the hook for becoming paper billionaires." Other states like Washington or Florida, for example, without income taxes, could look more appealing for launching companies. Bill Ackman also saying he believes in a fairer tax system, but is opposed to wealth taxes, adding, quote, "With respect to California's budget problem, the issue is not a lack of tax revenues. The problem is how the money is being spent." Representative Ro Khanna, whose district, of course, includes Silicon Valley, defended the ballot initiative, saying that entrepreneurs will stay here in California because this is where the talent they need is concentrated, adding on X that Jensen wasn't thinking, "I won't start this company because I may have to one day pay a 1% tax on my billions he built here because the talent is here." I'm sure much more to come on this very hot topic. Sarah, back over to you.
Yeah, and everybody's correcting him. It's 5% according to the measure. And, I guess it's not, Kate, billionaires just complaining about the government taxing billionaires. I mean, I think there's plenty of actually constructive calls here to make the tax system more fair. It's just about the government seizure of assets, particularly unrealized gains, which are so critical in terms of building a startup, right?
And would that cause people to consider where they want to build their startup in the future? Will you go to a state that has a more favorable tax policy? And will this, de-incentivize people from building companies here? Representative Khanna says absolutely not. That's a risk that he's obviously willing to take. But many top voices in the space weighing in and saying, yes, it will.
Yeah.
We are going to see what happens with California. Not sure if this thing actually ends up passing. Again, Ro Khanna represents, in his district, Silicon Valley, pretty much a majority of the tax revenue that comes into California. So, those are the people that are giving him the hardest time about this. And the question becomes, will this get on the ballot? Now, if this gets on the ballot in November 2026 in California, I think there's a good shot people vote for it. California tends to go blue. You've got way more people that are obviously not billionaires in California than are billionaires. I saw some crazy stat yesterday about California California is a state with the largest number of billionaires, and they collectively, I'll put up the exact stat, but I believe it's California billionaires control about $2 trillion of the overall wealth if you add their net worths together, which is absolutely crazy. So you've got $2 trillion consolidated between all these billionaires. And obviously you got a lot of people that are not necessarily directly benefiting from that, or at least they don't feel they're directly benefiting from that. And if that gets on the ballot, I feel like they vote for that. I feel like the majority of Californians say yes, like tax the rich and take 1% of their assets. So I think that's the other reason you're seeing all this engagement on X with all these people like Gary Tan, Peter Thiel, Larry Page talking about this, because they realize that if this does get on the ballot, it will get voted for. And then we're going to see the implications of what that means for California. Bitcoin right there, 87.2, getting a little bit of a move higher right there. Webull was down about 1% of the day. And then TSM, the headline on TSM was that they raised prices on their chips this morning. That's why that stock up a little bit right here. After hours right now. Trump just said something about Powell. He will announce Powell's replacement probably January. Trump, I still might fire Powell. Okay, he's definitely not going to fire Powell, but maybe he is. Let's go back to Trump and see if we can get that moment.
Nations, which are great people. I know Iraq and Iran.
About your plan to expand the Abraham Accords.
Well, the Abraham Accords, think of that. We are doing, and also despite the fact that we have a fool, it's a man, and also despite the fact that we have a fool at the Federal Reserve. Biden reappointed him. It's too bad. You would have thought he wouldn't have done that. But he's an absolute fool who's building a new Federal Reserve, or he's doing a renovation of a building. Maybe he's up to $4.1 billion to do a renovation of a few very small buildings. It's the highest price in the history of construction. He's spending more money than any building has ever spent per square foot on the renovation of, as an example, I'm doing a magnificent, big, beautiful ballroom that the country has wanted, the White House has wanted for 150 years. It's a massive job, and it's a tiny fraction of that number. And we're under budget and ahead of schedule. Now it's bigger than I told you. After realizing we're going to do the inauguration in that building, it's got all bulletproof glass. It's got all drone, they call it drone-free roof. So drones won't touch it. It's a big, beautiful, safe building. But it's a big project for a tiny fraction of that. We're under budget and ahead of schedule. And they wanted it for 150 years. Think of it, the Federal Reserve building, 2 buildings there, they don't know what they're doing. They're way over budget. This was built during the Biden administration. And I rode by it the other day, and it's headed by the head of the Federal Reserve. Too late, too late, Powell. Too late, because he's always too late with interest rates, except before the election. He was too early, because that would have helped. That was supposed to help get her elected. It had no impact. We won all 7 swing states. But no. We're thinking about bringing a suit against Powell for incompetence, because think of it. These aren't outstanding buildings. These are small buildings. He said $4 billion more. It's going to end up costing more than $4 billion. $4 billion. It's the highest price of construction. Again, Democrats, highest price of construction per square foot in the history of the world. There's never been. Gorgeous monuments are built for a much smaller price. So we're thinking about bringing a gross incompetence, what's called gross incompetence lawsuit. It's gross incompetence against Powell. And it was his baby. And the guy's just incompetent. I mean, there's nothing you can do about it. He's just a very incompetent man. But we're going to probably bring a lawsuit against him. Thank you all very much. I appreciate it. Bibi, congratulations.
Question to the Prime Minister, please.
Okay. Trump teasing a gross incompetence lawsuit against Powell. That's quite interesting. I really doubt he actually would do that. But the technical definition of that is gross incompetence means a severe demonstrable lack of the necessary ability, skill, or knowledge to perform a job or duty, often resulting in serious consequences going beyond simple mistakes to represent a major failure in professional standards. It's different from negligence, which has more of a criminal association with it. Incompetence, I mean, quite frankly, incompetence just means you're stupid. That's like actually what it is. So it's kind of crazy though, because Powell gave him the most dovish FOMC you could imagine, gave him freaking 3 rate cuts. He's leaving in 4 months. He's not going to be here in a few months. He's going to be gone. And still, Trump is like, no, I want to sue the guy, which I doubt he's actually going to sue this guy. But the fact that he's even saying this is kind of wild, given, I mean, Powell gave him what he wanted. Unless Trump wanted 20 rate cuts this year, which I also don't think would have been the best idea. But we got 3. So that is what you have for Mr. Trump. Again, I think the big thing about the whole inflation tariff thing this year, and we talked about it, is like if Trump had gone through tariffs towards the end of the year, the second half of the year, and got the rate cuts out of the way in the beginning of the year, it probably could have played out a little better for him in terms of getting the amount of tariffs he wanted and not stoking inflation fears. Now, granted, even Powell admitted that inflation is not that big, or tariffs are not that big of a deal when it comes to inflation. So it ended up working out. But if they had just waited a couple months before initiating these massive tariffs in April, then maybe they would have got a couple rate cuts. Maybe they would have got 3 rate cuts before the second half of the year, and then they could have done tariffs. But then that brings up the question of Trump's negotiating strategy, which was centered around tariffs. And that also brings up the question about the Supreme Court, which we got a couple of days left of 2025. So I'm assuming in 2026, early January, we will get a decision from the Supreme Court. From everything I've read, the Supreme Court's not going to allow the tariffs to be in place. Now, maybe it ends up going 5-4 in favor of Trump and the tariffs stay in place, which would not be the best for Nike, Elf, et cetera. But maybe a lot of those other retail companies get a bid if the tariffs get reversed, even though the Trump administration has said there's plenty of ways for them to still implement the tariffs without the Supreme Court. So we're going to find out early 2026 how this ends up happening. Didn't Trump hire Powell? Yes, Trump did hire Powell, which is also that's in 2017 in that press conference, Trump was so happy to hire Mr. Powell. I don't think he knew that Powell was not going to necessarily be his friend, which is why it's like, you know, Trump's having all these meetings with these other Fed officials. I'm like, dude, just put Hassett in there. Like, you know, Hassett is going to do what you want to do, unless it really gets to the point where he can't, which means we've got a lot of other issues going on. But like, if you pick Waller or something, Waller's not as close to Trump as Hassett. Hassett is the one who's going to be the most loyal until he absolutely can't, aka the 10 years screaming at like 5.5%, and Hassett's going to be like, yeah, there's no way I can cut rates. But Waller is definitely not going to be as loyal to Mr. Trump. So I kind of still think Hassett has a good chance just from that loyalty perspective, but the bond market, 4-year or 10-year right here, 4.1, would still probably like Waller. You know, what was I going to say? What the heck was I about to say? It was on the tip of my tongue. I completely forgot what I was going to say. Dude, that usually doesn't happen. How did it escape me that quickly? Powell, Trump, 10-year. Oh my goodness, it was something about the bond market. I was going to say something about the bond market. It is gone. Just left me. Dude, it's something important about bond yields. Hassett, you have a medium rare brain now. Get it? The edibles just hit. Dude, what was I going to say? It was about 10-year 4. Oh, yes. What I was going to say was the pending home sales, which does have to do with the bond market. They were great today. Like, the results were phenomenal. They came in at plus 2.4%, or sorry, plus 3.3% versus 1% expected, even though mortgage rates have not meaningfully come down. I mean, you're still stuck at 6.3, 6.2%. So, and the reason mortgage rates have not come down, this is going back to the bond market, is that the 10-year is not cooperating, even though we're lowering rate. I mean, the 10-year should be below 4. We've lowered rates 3 times this year, but the yield curve continues to steepen. And as it continues to steepen, unfortunately, you're not getting enough buyers to come in to buy these bonds because which would cause the yields to go down because they still don't trust that inflation is solved. So the fact that the housing market is opening up and beating expectations by a massive 2% margin here, 2.3%, even though the yield curve is steepening and the 10-year is not coming down, goes to show how much pent-up demand there is for people that want to buy homes. Steve was telling me a story today about a friend in Long Island that bought a house 10 years ago at $450,000. He ended up selling that thing a couple months ago for $1.05 million. He thought the best he was going to get was $750,000. $1.05 million. It goes to show some parts of the housing market are so out of whack that people are willing to pay those prices because there's just not enough supply. And unfortunately, that lack of supply is leading to exacerbated prices. And now they're doing QE. Yes. And like the fact that we're doing QE and we're lowering rates and this 10-year still isn't budging. I mean, it's not good to see that. And I think that's another thing we have to watch out for going into 2026. Yeah, but he's paying double for his next house. That is also fair. I mean, realistically, unless you get a good deal on the house you're trying to buy, or you wait it out, right? You rent for a bit and wait till prices come back to reality and rates come down. But if you're going to be buying, and that's not realistic for most people. Most people, they need a place to live. So if they sell their house, they have to buy as soon as they sell. And, you know, unless you're better at finding a deal, then it's necessarily not going to be the best if you sell high and have to buy high as well. So 2026, we're going to see if the housing markets can also begin to open up. Siege, parasites from the raw steak you ate are eating your brain. Who knows? Maybe. Siege, thank you again for the $20 super chat. Appreciate it. Some good steak, guys. Some good freaking steak. I am turning into a medium rare guy. Neil, thanks for the super chat. Convinced my little sister to get into the markets today. I'm so proud of her. Wow, congratulations. It is not easy to convince people to get into the markets. It is hard. I'm sure a lot of you guys relate with trying to get your friends and family into the markets. Just getting them to even care is not the easiest thing in the world. Tesla's still falling after hours. One of the reasons it's hard to get people into the market is because they buy Tesla because they think, all right, Tesla, that's a great company. And then boom, they're down 4% for seemingly no reason. But it is awesome that you got your sister into the market. Tesla, I'm trying to see if there's a headline. Again, I didn't know we get delivery numbers on Friday, but we do. And maybe this is the street's way of saying we're a little bearish for these delivery numbers. Which, do the delivery numbers even matter anymore? Every time we think they matter, and it's like, do they actually matter? Or do we just pretend to think that they matter? I can't win. I was doing medium well for a year. Everyone yelled at me. Now I'm doing medium rare, and everyone's like, it's not cooked. I cannot win. I don't think it was rare, though. Like, I haven't had a lot of medium rare steak in my life, but I mean, tasted pretty damn good. I feel like if it's rare, it would not taste as cooked as it tasted. It just obviously wasn't cooked to the level that I was eating last year when you could see pretty much no pink. Medium raw. But I thought it was good. Yeah, I don't have a headline on Tessie. That's wild, though. Tessie, dude, 498 to 457. Again, the volatility of this stock is what gets people excited about it. But it's also what will absolutely rip your face off some of these times. Okay, steak tartare, I refuse to do. That's a big European thing, right? Steak tartare. I've seen videos. I don't know if I could do that, dude. That shit is different. Maybe I will evolve to being a steak tartare person, but that stuff is a little wild. Like, it needs to be somewhat cooked. I feel like that is just completely raw. That's a little tough to be excited about. Is there any news on Tesla? I do not see anything. I do not see anything across my radar outside of these potential. Is Elon tweeting something crazy? Let me see. Let's see if Elon's tweeting. No, Elon's tweeting about voter fraud. Elon's gone back to politics. There was like a 1 month period, I think in September, where he went away from politics. And yeah, now he's back to a lot of politics. So yeah, like I'm scrolling through the last 50 tweets, it's all politics. So I don't think anything that Elon tweeted. I'll bring the live cow for the meetup. Any things for the NYC meetup available? Yes, the link is in the description. I'll put it in the chat right now. I believe we're at 250, so we have about 50 spots left. And signed up and you got your ticket, you're going to be getting an email soon. You might have already got it today from Jess, which is going to have the hotel link if you want a relatively good deal on a hotel nearby the meetup spot. And so you should be able to book through that Marriott link for a decent discount if you are staying for a bit. Yeah, the Trump Powell comment was that he called him a fool and that he's considering bringing a lawsuit against him around gross incompetence. But that was what he said earlier in the day. And you mentioned Anthony Joshua earlier. His two close friends passed away and the images are horrible. So I haven't seen too many updates on the story of it. I didn't even know those were his two close friends. I thought those were just two random people he was in the car with. But that is kind of wild if it's his two close friends. So for those that missed the story, Anthony Joshua, famous boxer, was in a car crash in Nigeria today. And apparently two people did die. I'm finding out now from you guys that it was his two close friends. And he survived. And it's kind of wild, dude, because him and Jake Paul last week, that was a big fight. Captured a lot of people's attention. This is a picture of Anthony getting out of the car. And it's just wild how fragile life is. I mean, last week he was probably feeling on top of the world, made like $100 million from the fight, just knocked out Jake Paul. You know, most people aren't really fans of Jake Paul. So, I mean, they were happy to see Anthony knock him out, even though he did last 6 rounds, which is incredible. And then a week later, he could have potentially been dead. It was absolutely wild, the fragility of how quick life can enter the world and then leave the world at the same time. But that was the story with Anthony Joshua today. All right, some macro charts. Let me pull these up. So a couple things I thought that were relatively interesting. First of all, Wedbush, he put out his top, Mr. Dan Ives, 5 AI names for next year. And he has like his AI Ives 30, but these are the consolidated 5 names that he's going with. Microsoft, Apple, Tesla, Palantir, CrowdStrike. Interestingly enough, NVIDIA's not on this list, which I thought was rather peculiar given NVIDIA is one of the most important names in AI. So Dan Ives is going software with Palantir. You could call it software/infrastructure with Microsoft with the cloud. Tesla for autonomous. I mean, picking Apple over NVIDIA is kind of wild in my opinion, given the multiple they're training at, but I guess he's going Apple with the consumer Siri AI adoption, which honestly should be really bullish if we can finally get a use case for AI that is like meaningful to all of us via our voice, so that we're not constantly typing into these LLMs, because there's so many times I want to ask Siri questions or ask Siri to do stuff, and I'm like, I know it can't do it, so what's the point? So I do think that could be a meaningful revenue driver for the company. And then CrowdStrike with cybersecurity. Look, I think cybersecurity is going to be important, but CrowdStrike's multiple is up there. And Palantir's multiple is up there as well, but Palantir's growing really fast. And even if you hate the multiple, Palantir, if they come up with 65, 70% growth all of 2025, it's going to be hard to be like, oh, well, it's not going to be hard, because even with that growth, like the multiple is still exaggerated. But it's one of those things where you can't be like, they're only growing 30%. How are you giving them this much? It's like, no, they're the only company in AI that's growing anywhere near 60-70% outside of NVIDIA. CrowdStrike's not growing that rate. CrowdStrike's growing at like 22%. So unless CrowdStrike shows me a real force of action with cybersecurity and AI being a tailwind for cybersecurity, which I do agree, AI is going to need a lot more cybersecurity, but CrowdStrike has not shown through their ARR growth this year that like it's meaningfully increasing revenue at some crazy rate like it is for Palantir at 60%. Now, Palantir has the burden of continuing that growth, but CrowdStrike has the burden of re-accelerating that growth. So I think it is interesting that NVIDIA doesn't make the list, but CrowdStrike and Apple, which are just not growing, but still have pretty aggressive multiples, do make that list. And I guess we're going to have to see where 2026 goes with these names. What do you think about Fortinet over Crowd and cybersecurity? Honestly, I've not studied the cybersecurity space strongly enough to understand which one's better. I would say if I had to pick one, it's got to be Crowd or Palo Alto. I mean, these are the leaders in the space. I did own Crowd a little bit during that whole Y2K scenario back in 2024. I ended up selling it. Should have held on to it because it's done very well. But in terms of like the leaders of the space, it's CrowdStrike and Palo Alto. But Palo Alto is started engaging in a lot more acquisitions because they can't organically grow either. So if Palo Alto is not giving you even 20% organic growth, and they have to, I think they spent what, $15 billion this year in acquisitions and multiple acquisitions. I mean, is CrowdStrike that much better that they're going to grow upwards of 30, 40% just because of AI? I don't think so. I think we would have seen it by now. So I think yes, long cybersecurity, but these multiples are not the most exciting. He forgot Nebius. You know, a lot of companies forgot Nebius. Now, Nebius is on his predictions of the companies that could get acquired next year. But whether it's Nebius, Iren, or CoreWeave, take a look at this consolidated post right here, and then we'll get into some macro stuff. No one has the data center plays on their list. Morgan Stanley, Amazon, NVIDIA, Arista, their top picks, Bank of America, NVIDIA, Broadcom, Google, RBC, Airbnb, Meta, Uber, Dash, Microsoft, Intuit, Salesforce, and then Wolf Research, Micron, NVIDIA, Microsoft, Google, Amazon, Meta, Uber. None of them have CoreWeave. None of them have Iren. None of them have Nebius or Cypher or Wolf or Oracle. I mean, I think all of them are so scared to put Oracle on the list given the level of debt that they know Oracle is dealing with. And so, you know, maybe the data center plays are just getting out of fashion right now, which might be the buying opportunity. But also, I think there's just a lot of fear around what we have with data centers. They are definitely high risk. I mean, like, again, the problem is every time these companies come out with earnings, the earnings are so bullish because they've booked complete capacity. Any customer they can get, they are selling out. Like everything you want to hear is there. But then the problem is they have a lot of debt. They have to issue a ton of stock, and none of them are profitable. And so you're essentially buying growth when you buy CoreWeave, Nebius, and Iren, and you're sacrificing a lot of the other traditional financial metrics that would signify a healthy business because you're assuming the health of that business improves at a rapid pace, but the growth improves even better than the health of the underlying metrics, and eventually they converge to giving you a relatively strong investment case for these stocks. But you have any headline that goes against it, like an Oracle data center delay, an OpenAI CoreWeave deal that's not necessarily coming to fruition in the way or at the speed at which analysts were projecting it, that's what starts to take down the market and really think, are these data center plays going to live up to the hype? But I still think you got to have some exposure to them. And again, in my 2026 Substack tomorrow, I'll have a lot more details on how I'm thinking about these data center plays. But if you don't want to take the risk on them, I mean, NVIDIA is the simple stock to buy. Is, you know, it's not that complicated. If you don't want to be in super high volatile data center names, then it's like, all right, just you essentially capture the entire market with NVIDIA. It just might not grow at the level in terms of their stock price, given NVIDIA's at $4 trillion versus the other ones. Amazon seems to be the play for 26. I agree. Amazon was on the list of Wall Street bets for their top convictions for next year. Along with Rock Lab, ASTS, SoFi, Nebius, Reddit, etc. I do think Amazon is a coiled spring. I think this one ends up coming through. What happens to NVIDIA if China attacks Taiwan? NVIDIA's done. The stock market's done. Amazon's done. I think everything's done. If China actually attacks Taiwan, we're done. Like, because either we go into a war with China, which means hello, World War III, or we let China take Taiwan, and then China now controls AI because they control TSMC. So that can't happen. Like I was talking about it last night. That it really can't happen. Like if it happens, I don't know, dude. We've got issues. We've just got a lot of issues. This Russia-Ukraine thing has been going on for so long, and Ukraine, one of the most valuable things they create are rare earth minerals. But that's not like everything that's needed for the AI trade. And the AI trade is essentially the economy right now. So Taiwan is done. And again, if China's straight up like, hey, this is happening and like it's gonna happen, you guys can either fight us or you guys can, but like it's like we're not backing down. Like there's no negotiating here. Like it's going to happen. Whether it takes us 5 months or 5 years, we are unifying China and Taiwan right here. I mean, I don't know how the US reacts to that. Yeah, buy puts. Like, I wonder if you even have a chance to buy puts. I wonder if you even have a chance to have an opportunity to buy. I mean, maybe buy Lockheed Martin that day. But even then, a lot of the shit Lockheed Martin gets in terms of raw materials and supplies comes from Taiwan. Like this stuff is just not, it's very hard when you're in an integrated economy to be able to navigate a lot of these issues. All right, so let's get to some of these macro charts as well. And keep going from there. Brandon, thanks for the super chat. Have you looked into free cash flow versus net income bears on Amazon and thoughts? Personally added like crazy, but interesting to hear the bull case with AWS acceleration. I think the better metric over free cash flow versus net income, because I mean, you've got some bears that make that argument, and part of the reason for their argument is that operating margins on Amazon are not that strong. I would look at two things. Number one, EV to EBITDA, which is I think a much better metric when we try to discuss like what is the actual enterprise value of Amazon versus the earnings that they're putting up, and where is that traded historically, where is that trading now compared to the Max 7? It is the lowest out of all 7 of those companies with a better growth rate than many of those companies. So that to me is the more important metric. And then the second metric here is the rate of growth of operating margins. If you look at their balance sheet, operating margins 6 quarters ago was 7.3%. They're now at 12.4%. So that's a meaningful acceleration of about 5% over the past, call it 2 years, year and a half. If that number gets to 15, 18%, Amazon's going to be printing tens of billions of dollars or more of net income. That multiple is going to expand. Not to mention AWS reaccelerating, which AWS already has 36% operating margin. So I think the story on Amazon is simple. I don't think we have to keep reiterating the bull case. You either believe in it or you don't believe in it. But it's not something that feels super complicated. And could it have a flat 2026? Yeah. And if that happens, it's like, okay. But I think, again, it's one of those stocks where if you're genuinely like, hey, I want to own Amazon in 2040, and I know it's going to be more valuable than what it is today, am I willing to go through some years of just pure stock price depression in order to eventually catch the upside? Because the upside should be pretty massive. And maybe it's next year, maybe it's not, but I think Amazon should be fine going into next year. And realistically, if we get 280, 300, buying at 223 or 230 right here, you're buying something that helps you sleep well at night. And if you get a 30, 40% move next year, I think you'd be pretty happy. Okay, a couple macro charts. So take a look at this. Earnings are driving the market's rally. A lot of people are asking, why is the S&P 500 up this year? Outside of inflation going down, outside of rate cuts, it's earnings. The contribution of earnings growth to S&P 500 returns is up 79% year-to-date in 2025. That's on track for the second consecutive annual increase. Earnings contribution has increased 24 points year-over-year and has tripled since 2023. So if you look at 2023 earnings growth, it's at 27% on this chart. It is at 79%, which is why the multiple expansion is the lowest in the past couple of years, but continues to expand. We are trading at pretty much the highest PE on the S&P 500 in history at around, I think, 26 times or something like that because of earnings growth. Multiple expansion was 45% last year and 73% of market gains in 2023. And the sort of way to summarize this is that the quality of the market momentum is improving because the market is rewarding the companies that are putting up earnings, which I think is really, really important to understand going into next year. And as a result, foreign demand is coming into 2026 because of the increase in 2025. So net foreign purchases of U.S. assets are up to an annualized $1.65 trillion this year. This is up $450 billion or 38% from last year's foreign assets or foreign adoption of US assets in 2024. Equity purchases have doubled last year to 650 billion, and foreign investors bought 20 billion more in treasuries than in 2024, bringing total purchases to 580 billion. So this is another argument, and Steve at lunch made a great point, not just about the foreign investment that's coming into the United States, which again, where is it going to go in 2026? And I know the United States has underperformed a lot of the rest of the world, but the fact that we've been able to increase the amount of investments that come into the United States by 38% year over year just means even with the underperformance, we've done really well. And it looks like that's not going to be slowing down. So the point Steve made at lunch today that I thought was also really important is you've got a lot of older people that are on Social Security, and they're going to have no tax on Social Security. So let's call it, just making this number up, an extra $1,000 a month that they're going to have because they don't have to pay that tax on Social Security. Maybe it's an extra couple thousand a year. Where is that money going? It's probably going into income producing assets. It's probably not going into Tesla. If you're like 75 years old, you're probably not going to take the risk on Tesla. But a Verizon or a Schwab dividend ETF, I mean, like, you just have a lot more money chasing yield, especially when yield is going to be attractive if rates continue to come down. And you have the types of people, older people, that are looking for safe income producing yielding assets that now have an extra couple $1,000 per year or per month based on how they get Social Security that they don't have to pay taxes on. And so, yes, it can go to expenses, but if you are older and you kind of have your expenses budgeted and you just get an extra couple $1,000 and you're not young where you have like massive amounts of expenses that you have to deal with, if that goes back into income producing assets, I mean, that could be really good for some of these dividend plays next year. Now, if we have a bull market, the dividend plays probably underperform the growth plays, just given the sheer nature of the amount of money that would be coming into growth. But it's definitely not a bearish thing going into the end of the year. And so I think those arguments could also be very important. Yes, the dollar did lose 10% of value for foreigners. That is also true. But I think that's also part of the reason why foreigners have put a lot of their money into U.S. assets outside of the dollar, given it's losing 10% of its value. And I don't think this changes next year either. I mean, I don't think Trump necessarily wants this to change. So gold, silver, maybe Bitcoin, and the stock market is probably a better bet than the dollar, which means theoretically more money should be finding those assets. Mitt, don't you feel HIMS is just left out of flavor, like no news coverage as it used to have earlier? Yeah, I mean, I think the problem is they're dealing with lawsuits. They're dealing with Novo competing with them aggressively. And obviously the stock price has been depressed. So the quality of a community really comes from how much content can be produced even when the stock isn't moving, because that goes to show you how many people actually care about the company versus the stock. And I don't know. I haven't seen that much content about it. At least I haven't seen a lot of exciting content about HIMS in the midst of this essentially 50% drawdown, right? It was at 60 a month and a half ago. Now it's at 34. And maybe this thing is going to need to get back to 60 before people start getting excited again. It takes a special stock to be able to get people to care even when the stock is not moving. It's not easy because it's just like most people just care about the stock. So you got to have a loyal following of people that care about the company. Like think about Tesla for the past couple of years. Tesla's been flat over the past couple of years outside of like the recent momentum, but people still produce content on Tesla. I mean, there's like 15 different Tesla channels that produce videos every single day just because of how much loyalty there is to covering Tesla. And I think that's the difference between a company like Tesla and HIMS as well. HIMS has to rip another Super Bowl ad. Yeah, they might have to do that as well. Amit, I predict seniors will bet big on tech because most don't have enough saved for retirement. Okay, so this is actually a really good comment, and it brings up a couple of key points. Morgan Stanley put out some research today, and their research was consistent with an article that went viral on X over the weekend. And this article was essentially around financial nihilism. And I think people have heard of this concept before, but the sort of gist of the article, if I had to summarize it, was that, yeah, here's the article right here. It's called The Prison of Financial Mediocrity. This thing got 8 million views. I'll put the link in the chat for anyone who wants to read this. And the idea of the article was that young people are realizing it's better to have a 5% chance of getting rich and YOLOing into some type of asset or gamble in a prediction market, whatever it may be, versus continue the pessimistic view of living paycheck to paycheck and realizing that your money is getting destroyed by inflation and that Social Security, which is what you're contributing to when you're young to get benefits of when you're older, this is what the Morgan Stanley research put out today, is likely not going to be what it is today for people that are actually benefiting from Social Security. So this chart right here from Morgan Stanley shows the Social Security Trust Fund balance coming down. And they said the stark reality is that we are living longer. That means higher costs for a longer period of time, and out-of-pocket medical expenses keep escalating. The cost of in-home healthcare is growing 3x the rate of inflation, and an increasing number of seniors are now spending more than 33% of their income on rent. Bottom line, while the social safety net did a great job of caring for the greatest generation, the same likely cannot be said of the baby boomers and future generations. AKA, we do not have enough in the reserves for when people like myself that are 28 years old right now become 68 and want to pull from Social Security. You're either going to have to decrease the amount of money you give to someone like myself when I get to that age, or increase the amount of money you take currently right now at this stage of life to be able to afford to pay me 40 years from now. And Morgan Stanley is just like, we don't think the government's going to have the money. We think there's no way, given the increase of the deficit that we're seeing, that the government's going to have the money. And so you've got that argument paired with this financial nihilism article that went viral over the weekend, and going to your point in that comment, which is that older people might end up taking risks on tech stocks because, theoretically the conventional argument is when you're older, you buy something that doesn't move, like a Verizon, gives you that 6% dividend, and you have enough money saved up that you can generate a large amount of income on the yield from the asset, and you don't have to worry about it falling 30-40% if Trump tweets about soybeans. Because when you're older, and you're not making income, you can't really afford to lose the money. But if there's a shift in the paradigm of how people are thinking of wealth creation, they might have to start taking more risks. And young people might have to start taking more risks as well. So what's the implication of this for all of us? I think number one, it means, honestly, long Robinhood. It means long markets and long tools that help people get invested in markets. Because if people are realizing the only chance they have is to get invested, now you can take it the extreme angle of people like gambling on weekly options because they think that's their best way to get rich. I think that's totally stupid, and that's not something that I would endorse. But the point is, people are going to be more interested in the concept of saying, hey, I need to invest in Amazon today because I don't know if my Social Security in 50 years or 30 years is going to be able to pay me any dividends that I'm contributing today. And who am I going to complain to at that point? Like, if there's no money left, there's no money left. So maybe I need to open up a Robinhood account or a Coinbase account and buy some Bitcoin because I think it'll be around in 30 years and it'll be worth more than it is today, or buy some Amazon because I know that'll be around in 30 years and it'll be worth more than it is today. So I think that's bullish markets, but it's also, it's also sad at the same time because it's almost like realizing wealth inequality has gotten to such a point and people are feeling so trapped in the financial situations that they are in, which is why I keep saying it. Don't underestimate an AOC presidency. I was talking about this with Steve today. I think you guys probably know Steve's not maybe the biggest fan of that type of political ideology, but he also is not underestimating the fact that AOC absolutely has a shot at the presidency. Now, will she win? I think it's hard to believe that she would win. But the idea that she doesn't have a shot is crazy, given she's going to be appealing to millions of people that feel like they're stuck in financial mediocrity. And I think all of us have felt like that at some point of our lives. And that's why we decided to get into the stock market and started caring more about the stock market. But it is something that a lot of people are feeling. And it might require a lot more risks from people. And those risks, look, I like the prediction markets as a business model. I do not think people should be gambling on the prediction markets every single day. And I think that's an easy way to lose a lot of your money. But the fact is, it may be an attractive opportunity to people that feel that they've got nothing to lose anyway, which ends up becoming something that potentially could give them a lot more to lose if they get addicted to gambling and all this stuff. But it also could be their way out of financial mediocrity, even if there's a 5% chance of finding a way out. Now, the more responsible way to think of it is, hey, I'm going to take a portion of my income, I'm going to try to make more income, and I'm going to put it into the market and try to put it into the most important companies that I think will be around, and try to beat the S&P 500 every year, and try to diligently find a route to success. The degenerate way is I'm going to gamble on options or gamble on prediction markets and try to turn one into $50,000. And a lot of times that doesn't work. Sometimes it does, but usually it doesn't. And I think that is the crisis of inequality and fear that is going to be propagated a lot more going into 2026. Yeah, max leverage, all this stuff that's messed up crypto. It's a lot of people just trying to get rich really quickly. Jim, thanks for the super chat. What do you think about URA as a long play for clean energy to help power data centers and everything else that's going to need clean power? I have not heard of this play. I will put it on the list. Energy is definitely something I'm looking at seriously next year. I'm still doing some due diligence on Bloom. I know a lot of you guys have talked about that. I've started reading a few articles on it, and I am liking what I'm seeing. I have not done any valuation work on it yet. I'm just trying to get a more fundamental understanding of this. URA, though, is just the global uranium ETF. I mean, look, being long all types of energy via ETF is not crazy to me, but I also think there might be some more specific plays. Now, granted, you get in this thing after it's up 62% year to date. That's crazy, dude. Makes sense why Oklo and SMR are up so much. Goodness, 62% on there. But this is filled with the Oklos and SMRs, right? Centrus Energy, Energy Fuels, that's what this thing is filled with, right? Yeah, I'll take a deeper look, taking a much deeper look into energy. I'll probably have some thoughts going into 2026. Mid is all in Beyond Meat. Dude, where is Beyond Meat? Remember when that thing had its run a month ago? 86 cents. Of course. See, this goes back to that whole financial nihilism thing. It's like people feel that Beyond Meat is their savior and they go crazy. I mean, I think there was, this thing got to $7.69. There was a dude who had, I think it was 250,000 shares of this thing. I remember on X, and he was trying to become the Beyond Meat like cult leader and get people to believe there's something here. There's nothing here. It's all fake. But it's like people would rather chase this stuff. And I can understand why. It's like, if you think this thing, like I was in that position 5 years ago and I was investing in really speculative stuff thinking that it would go to the moon. It's like, it takes the hard reality of losing it to realize it's just not the easy way to get there. Looks like 20% S&P 500 is not happening this year. Where are we at on S&P? So S&P is 687 for the year. Year to date, we are at 17.65. So 20 minus 17.65, we need 2.35. So let's do the math right there. We need 16 points on the S&P, which would put us at 7,003 on SPY. So we need 703 to actually hit 20% this year. I'd be happy with like 695, but it would be really cool to close the year out on 7,000. It would be really cool just like to see that happen. But 703 is what you need for a 20% year. I got 2 days left. Let's do a poll in the chat. How many people think we're going to get 7K next year? Let's do this poll and see what people think. And I don't know. 2 days for a 2.5% move on the S&P. SPY 7K by end of year. Got pretty damn close. Do we actually say it happens in about 1.5 days? Oh yeah, what are the prediction markets saying on that? I wonder what the probabilities are. Let's see if we can pull that up. No, we'll get to 8,000. Let's see if Kalshi has this. Wednesday's a half day? Is it a half day? Wait, really? No, I thought Wednesday is New Year's Eve stock market open. I don't think it's a half day. No, it's a full day. What are you guys saying it's a half day? That's a full day. Last year, I remember it was a full day as well. Unless Gemini is lying to me. We got a full day New Year's Eve. So, yeah, only Thursday's off. And so we should be live to see everything that we've got. Ty, thanks for the super chat. Have you looked into Coterra Energy yet? I have not. What is their ticker? Hold on. I think I know their ticker. No, I have not looked into this one. I will put this on the list as well. CTRA. I know TE is one that a lot of people have been asking for, so I will put CTRA on the list along with Bloom and TE as we think more about energy. Are we working on New Year's? No, we won't have a stream on New Year's, but we will have a stream on New Year's Eve, and that'll be a long stream. So I think it'll be me, what's his name? Steve and Matt. I don't think Chris is going to be there. I don't think Tanner's going to be there either, but it'll be us three. Honestly, I'm not even sure if Matt's going to be there. So it'll definitely be me and Steve. And we'll bring the Jaeger. So we'll make sure there are some Jaeger shots to go around. Okay, what else do we got? What else do we have? I thought this chart of gold was relatively interesting. I mean, one could argue this is why you don't want to buy gold right now, but take a look at this. Gold prices have been above their 200-day moving average for 550 days in a row, the second longest streak on record. The last time gold had a streak like this, which was 750 trading sessions above its 200-day moving average, was before the 2008 recession. So, I mean, hopefully that's not a signal. You hear all these stats. It's like, well, this happens before this happens. And you start thinking how it could play out. But yeah, this price action on gold has been quite phenomenal. And then, gold down 4% on the day doesn't even feel like a big deal, even though that's massive. That's a couple $1 trillion out of gold. But silver at 9% down makes you think some other stuff is happening. Palantir hasn't had AIPCon. Palantir did do AIPCon in September, and they have the Paragon event in December. So I know it doesn't seem like they've been super active with a lot of press releases or stuff like that, but it's also kind of just what happens after earnings. Because earnings was at the beginning of November, and they were in the news a lot with the whole Michael Burry thing. But yeah, it has been a month and a half after those earnings. And the stock has been able to relatively be stable. I mean, Palantir is one of the best performing stocks this year. Palantir year to date, 145%. Dude, last year was 345%. Like, that is wild. 2 years in a row of triple digit returns. It's just incredible. It's absolutely incredible. So it has had an incredible year. And now if they can just sustain the growth going into next year, I think it will still be something that attracts more investors as like the AI play. They've just got to keep up the growth. I think that's the most important thing for them. Shots of warm vodka and milk with Steve. Steve said he might actually bring some wine. Steve doesn't drink that often anymore, but I think he might bring some wine. I'm going to have the Jaeger. I'm going to have the honey Jack Daniels as well. Dude, I bought it like a month ago when my cousin came over, and I thought we would drink it. We just never ended up drinking it. So I have that, though we're probably going to open as well. All right, let's see what else. What else do we have? If not, I don't think we have any other crazy headlines on the day. We should have some Shirley Temples. That's a good idea. I just got the book Philosopher in the Valley. I know you interviewed the author. It was actually a really good book. I genuinely enjoyed that book, and I read that book. If you care about Palantir, if you care about Karp's personal life and how he got to this level of success, then I do think it's a good read. Let's get an update on that Powell headline and get a little bit of coverage on that.
Yeah, John, that's right. The president taking some questions from reporters down at Mar-a-Lago in Florida. He was asked about the situation in the Straits of Taiwan. Take a look at this graphic that was posted on social media by the Chinese embassy. You see those, I guess they're pink squares surrounding the island of Taiwan. That's where the Chinese government says their military is conducting live fire exercises. And you can see the encirclement, really militarily, of Taiwan there. That's causing some eyebrows to be raised, some attention to be paid to tensions in the Taiwan Strait. Of course, the concern is that the live fire military exercises could be used as sort of a ruse to engage in some actual military operations. So the president was asked about all of that today, just a few moments ago, and he sought to project some confidence. Here's what he said. Well, we don't have the soundbite from the president. But in effect, he said that he's not worried about the situation in the Taiwan Strait. He said he had not heard from Xi Jinping and was not concerned overly about that. He said military exercises have happened in that area for about 20 years. The president, John, was also asked about Jay Powell and the Fed. He said he's going to make a decision at some point in January. He re-upped his complaints about Jay Powell and the Fed and its building program. He's said once again that he's considering suing Powell for gross incompetence. He expressed real renewed frustration about the chairman of the Federal Reserve, saying that ultimately he's deeply frustrated with him, but suggesting that he's not going to move ahead with any attempt to fire Powell because we're so close. That means we're so close to the natural end of Powell's tenure. He says he does believe that Powell should resign as a member of the board even after he steps down as chairman of the board of the Fed, John. So the president continuing to hammer home that point that he's deeply frustrated with Jay Powell and suggesting he is going to nominate somebody soon, but not giving any indication one way or the other who that person is.
Again, I don't know why he's mad at Jay Powell. He gave him the rate cut. Like, what is there to be mad? He gave you the most dovish. He even said tariffs are not a big deal for inflation. Like, it's kind of wild that he's getting upset at Jay Powell. It's like, I don't think Jay Powell said anything since the FOMC meeting that would be bearish, unless Trump wanted like 100 basis point cut, which would just be unreasonable. Dude, if we had cut like 100 bips, if the 10-year can't come down and we're cutting 25 bips, if we cut by 100 bips, I don't know if that 10-year comes down out of the pure fear. Like, logically, it should come down because you're getting less real returns and people should be buying bonds and locking up their yields. But you might start having a lot of people think, what's actually going on for them to be cutting this aggressively? So I don't think the FOMC was bad. It's just kind of feels like the market got so exhausted post FOMC that it wasn't enough to give us the momentum we needed towards the end of the year. SoFi right there, 26.78. SoFi, just ugly day, down a full 1%. Then Tesla still falling. Still falling after hours. Why is Lisa Sue in the thumbnail? Because she's Lisa freaking Sue. Like, no one asks why is Tom Lee or Powell in the thumbnail. So why are we questioning Lisa Sue? You know, to be honest, I just picked one of the old thumbnails I had with Lisa Sue. Like, Lisa Sue's cool. No one questions when Jensen's in the thumbnail. I was like, all right, we got Lisa Sue. Let's put Lisa Sue up there as well. No, in reality, it was just like random. I mean, there was nothing that crazy in the markets today to identify any major trend or themes. And quite frankly, it might happen over the next couple of days too. So I think until we get to 2026, we might just have to see how this all plays out. AMD was actually green today, ironically, outside of all the other semiconductor names. Intel, by the way, Intel completed their $5 billion investment from NVIDIA this morning, 274 million shares. NVIDIA is now up 36%, or I think 35% on that investment. But they bought it at like 22 a share. Stock's now at around 37. So yeah, that also was completed this morning. Amit forgot to take her out of the headline. 295 on Micron, still moving after hours. I think that's it, guys. I don't think we got anything else. Yeah, she was the CEO of the year in 2024. Now, look, I like Lisa. I don't know if she deserved CEO of the year in 2024. I think there's definitely some other people that probably deserved it last year. But she was indeed the CEO of the year from Time Magazine in 2024. How many people said S&P 7000? Let me pull up this poll. Let me see what we have here. 60% of you guys said no. Okay, so 64% said no on the S&P. You stopped ranting and we dipped. I guess that's what happened. It is kind of crazy that I was ranting last night on just whatever topic I could think of, or that you guys were putting in the chat. And as I'm ranting, I'm just seeing Bitcoin go up. I I'm not saying I'm an expert on Bitcoin price action, but it really did not feel like we were going to hold 90K. Like it was just Sunday shenanigans all over again. And it was hard to imagine that Bitcoin would easily get back to the levels that we were at. And then we wake up this morning and I'm like 87th. I'm like, oh, of course, $3,000 red candle on Bitcoin. There was a clip here that I want to show from Stephanie Guild, who is the Robinhood macro strategist. And she's actually not that bullish for next year. She's one of the strategists with the lowest targets that I'm seeing here. And her target is assuming like a 5% move on the S&P next year, which is, I mean, it's 50% of the levels that a lot of other people have. It was a $3,000 rant. Let me see if I can find this clip. It was, let's pull this up right here. I think it should be around this level, but her target is 7,300 on the S&P. So she's a bit more bearish for next year.
At least for now, and my view can change, obviously, as new information comes, but
because your target for 26 is 7,300 in the
Yeah.
S&P, which suggests about a little less than 7% from where we currently are, which, you know, suggests, as you said earlier, you're somewhat cautious. So speak to that.
yeah, I'm just cautious because I think, at least for now, and my view can change, obviously, as new information comes, but I just think the largest companies aren't necessarily going to be the biggest winners, and that is why I'm more tempered on the S&P as a whole. But I think you can still see higher returns in areas of the index that aren't as highly weighted, right? Like, so, you know, I do think the consumer and the affordability issues are coming to a head. They've been talked about for a while, this K-shaped economy, but I think they're coming to a head, and I do think it's going to be a bigger theme for the administration next year. And between that and whether you believe it or not,
it's going to be the theme for the administration next year. They are going to hammer down the argument around affordability and that the country is affordable because they're going to need to. Earnings for the retailer stocks were really good, which makes you question if the consumer is actually that weak. But then again, a lot of that might be done on buy now, pay later and credit. So I think we're going to need a good 6 months of data to see where this affordability argument is going. But it is going to absolutely be a massive theme going into next year.
and I do think it's going to be a bigger theme for the administration next year. And between that and whether you believe it or not, inflation data that comes out a little lower, you know, you do have a new Fed chair next year. Like I think there's just some wind at the back of some of these, like, you know, non-store retail brands that have been just demolished this year that I actually think are looking kind of interesting. And so Gap is something we've been owning, for example, for all year. We recently put on a position in Lululemon. It is up a lot since that time, but you know, these are not without risk.
Yeah.
And so I think it's like kind of going back to like the consumer maybe being strong. And then, like I said, in spots of tech that aren't as big. It doesn't mean we hate every hyperscaler, but it just means that like, I think you'll start to see a little more appreciation for value.
Yeah, I think your point about like two like retail names there. One is consumer discretionary, say Lulu, right? And the other is probably more of a staple, right? And so the valuations actually kind of reflect that. And I think in a K-shaped economy, you know, and again, execution is a huge part. One of the reasons Gap has come back, better execution, right?
New CEO in 2023,
and Lulu is like the opposite in a way, right? Like they've been disrupted by some trends,
totally,
and maybe
tariffs hurt them.
And I would throw that into some degree execution, right? But you know, one of the things I just wanted to kind of double click on this a little bit. And so when you think about expectations for earnings, last week, FactSet Earnings Insight blog, this is John Butters. He was talking about the S&P 500 is expected to report earnings growth of 14.6% for 2026, which would mark the third straight year of double-digit growth. The Mag 7 companies are projected to report earnings growth of 22.5% for 2026, while the other 493 are expected to report growth of 12%. So what you just said, you're less excited about that top 10, and you're more excited, at least from a stock picking or a sector picking standpoint, about the others. So if you're getting 12% growth of the 493, can you make a broad market call, you know what I mean, like getting to whatever your expectations are with just relying on the heavy lifting of the other 4? Because that's a reversal of what we've seen.
It is a reversal. Although this past year you actually did see an improvement in the other 493. But when I was looking at it, I went by sector and I saw like tech 23% earnings expectations. I actually took that down to 18. And that's really what drove my expectation of 12% earnings growth for this year. And then I applied a multiple to it to get to the 70, what did I say, 300 or something like that.
So, I mean, the reason her multiple or her target is lower than the consensus, which I think is 7,500, is because of the decrease in earnings growth, and or at least her expectations of a decreasing earnings growth going into 2026, which is why I think this chart is so important that we showed 20 minutes ago. We've got to keep this up. We've got to keep earnings growth accelerating in 2026. And I believe, based on all the data that I've been looking at, we shouldn't get a decline in earnings growth because unless we have a recession, we should be good. Like, unless we have a recession or a massive level of increase in unemployment, which would coincide with a recession. And I don't think, if a recession is 2 quarters of negative GDP growth, I don't think this administration, with their intense focus on growing, is going to allow that to happen. Then I think we keep growing earnings. Like, I think it's very simple. That doesn't mean we have to blast off to 8,000, but that definitely 2022, for those that remember, earnings sucked. Like, they were bad. And everyone thought that even with rate hikes, we would be able to survive earnings not being as strong as they were. The rate hikes played a big role in terms of depressing earnings, but also companies just got really bloated post-COVID. Amazon, Meta, the classic examples, they hired way too many people. They had a lot of roles they didn't need to have. Work from home started changing. So, I mean, Zoom was at $500 a share. Zoom stopped being at $500 a share because people realized they don't need to work from home. But you just had so many shifts in the broader economy that you needed a year to flush all of it out. Not to mention you had the NFT nonsense. People were buying pictures of rocks for $5 million. Like, you just had way too much shit enter the system. There have definitely been some toppy things that have happened this year. But Bitcoin's down. It's flat for the year. Bonds have done better than Bitcoin. You tell me that's a bubble? Tell me that's euphoria? Nvidia's trading at 25 times. That's not euphoria. And then if you have earnings growth accelerating, which Q3 was the single best quarter we've seen in 4 years on earnings growth in terms of expectations versus reality, if that continues in 2026, like, whatever reason the market goes up or down next year, if it's to the downside, it's not going to be, in my opinion, because of a lack of earnings growth. But if it goes up, I think one of the major reasons is going to be because of the strength in earnings. So I think that's also going to be a really important part of understanding 2026. Do we really see unemployment going lower? It does. If it does get a bump, it'll mostly be due to seasonal work. Yes, I agree with that. I don't think it has to go lower, but I definitely don't think it has to, bump up to like 5.2, 5. We're just not seeing that in the jobless claims. If we saw the jobless claims start spiking up, I would say, okay, there's, maybe there's an argument for this. Not saying the labor market's not weak. It's just, you're not seeing it being catastrophic yet, which actually puts us in a good spot because earnings are strong, labor market's not horrible, and you're cutting rates. I mean, that is the recipe you need for a relatively strong foundation for 2026. Gold and silver rotation into equities will fuel the next leg of the bull in 2027. I am so curious to see what the hell happens with gold and silver next year. Like, do we really normalize gold and silver being the number 1 and number 2 asset on the planet? Gold, I can understand. Silver, I mean, it's just below Nvidia now. Like, it would be quite incredible to see these normalize at these prices. And I have no exposure to them. I'm not long, I'm not short. So I'm on the sidelines seeing what happens here. And I think we'll get some evidence in the early half of 2026. What about copper? Well, I think copper is going to be contingent on gold and silver. I mean, maybe copper potentially breaks out outside of those two. But I mean, again, we saw palladium today, dude, down 17% in a day. Like, anyone who bought any of these freaking commodities on Friday got their faces ripped off today. 17.39%. So as of now, unless they recover those Friday highs, it's a top. Now, people are saying, well, it's up a lot year to date, so obviously it's taking a breather. It's like, okay, it's taking a breather, but this is almost like a 20% reversal from Friday. It's a little bit more than a breather, especially when commodities should not be even moving 10, 12% in a day. And now it's happened twice with silver. Friday to the upside, 10%, and then today to the downside, 9%. So we're going to have a lot of questions, a lot of questions for 2026. Mitt, would you write covered calls this year to get extra cash for premiums in case the market drops in 2026? Yes, I'll talk about that in the Substack article tomorrow. But I do think, I think some people thought 2025 would be like a covered call type of year. I was thinking of that in the beginning of the year. But then we had the 30% drawdown, which ended up being a buy the dip type of year. And a covered call type of year means things need to be relatively flat. It can't be a raging bull market for covered calls to work because you just get your face ripped off as the stock market keeps going higher. 17% doesn't feel like a raging bull market, but we're up more than 30% from the lows in April, which is really when the raging bull market started. And covered calls have not been working since then. So I think in 2026, on certain stocks that aren't potentially poised to have a massive breakout, or even if they are, it's going to take a few quarters for that to happen. Yeah, like I think covered calls should be okay. But then again, maybe 2026 is a massive bull market. It's year 4 and like it really keeps going higher. Bitcoin just struggling to hold 87,000 right there. And maybe covered calls don't end up working. So we're gonna have to see going into the new year. All right, what else do we have? What else do we have? I think that's it. Will SoFi touch 21 again? If it does, I am buying that dip. If we actually get to $21 on SoFi. I mean, if we see that, I'll be happy. What do you think of Rock Lab next year? I think it's trading at a very aggressive multiple, but it's going to be the SpaceX proxy. Also Neutron, super bullish. It's probably priced in, but maybe it's not. So I don't know if it's net new capital goes long here, Rock Lab, but I think if you own it, you hold it. And if the SpaceX IPO takes off, Rock Lab probably catches a bid. Would you be happy if HOOD goes to 50? Okay, I would not be happy if HOOD goes to 50, but dude, I am buying a lot of HOOD if it goes to 50. If we actually see $50, I mean, I wonder what would have to happen in the markets next year if we see 50 on HOOD. Or like 80 on Palantir. Or I don't know, 90 on NVIDIA. Like if we get those types of drawdowns, something broke. And I just hope I have enough money at that point to buy what I can. But look, would I be happy if HOOD at 50? No, but I also really do have a long thesis on HOOD. So, I mean, it would just be a phenomenal price to buy it for the next 10 years. Because at this point, I just trust Vlad and his ability to execute. I mean, they're doing the 4th day of HOOD holidays today. Like the fact that they're even giving away these prizes and keeping all this engagement, like it's not easy to do that. But, they keep pushing the envelope here. Is that it? Is that all we got? I don't think there's any other crazy headlines. Rant's going to occur on literally any topic with a yapper this skilled. Dude, I'm ranted out. I didn't even get to really watch all my Grays last night, bro. Guys had me ranting for 2 hours. That's 2 episodes of Grey's Anatomy. 2 episodes. I did not get the Apple Watch. I got $2 of Ethereum, which is nice, but I thought I might get the Apple Watch. Nikki says we're about to repeat 2022. What do you guys think? Put in the chat. You agree with Nikki? Are we about to repeat 2022? Again, Nikki, I can sympathize with that perspective. The only problem is 2022, we raised rates the fastest in 40 years. I don't think we're doing that next year. And that plays a really big role on asset prices. So could we have a 0% year? Sure. Could I see the market just stay flat 100% after 3 really good years? Do I see the market down 19.7% like it was in 2022? I don't know, dude. Again, because that means the stocks that I just mentioned will get to prices that are well below 20% if the S&P falls 20%. And I don't think that happens. At least I'm assuming that doesn't happen. Tanner says, did you get to the bomb episode? Tanner, I watched Grey's Anatomy back in 2017. It's just been a long time. So I remember some parts of it. I remember the episode you're talking about. I did not get to this episode yet. I think that's episode 17 or 18 or something in season 2. But I do remember this episode vaguely, and the plot is kind of stupid, to be honest. The plot is really stupid. But it's the characters of Grey's Anatomy that I am hooked on at this point. Zero change of repeating 2022 in a midterm year, zero. Well, remember, 2022 was a midterm year. Like 2022 was an ugly midterm year. So 2026 will once again be a midterm year. The question is going to be, does it have midterm year dynamics that we got from last year or from last time this happened in 2022? I tried Ozark, bro. That shit got so boring. I'm a different breed when it comes to consuming these shows. I couldn't get on Ozark. I tried it years ago. Maybe I need to try it again, but the episode starts off with him and his family running away from some danger. I'm like, bro, what is this shit? Like, I don't like, this is not like, I need character development. I need like, I need to see like, I need to get hooked on a character. I need a voiceover. I need, I need a story that I can get hooked into. Which is ironic because you would think with my ADHD, that freaking like Ozark would get my attention because it's so fast paced and they're moving and all this stuff. It's like, nope, it doesn't work. It doesn't work for me. You don't stick around for the character development. Well, look, my time is valuable. It's precious. So if you don't get that character development within the first 5 minutes, I'm out. I am out. Dude, I heard Stranger Things was bad. Like bad. Like I heard people like on Rotten Tomatoes, it's getting like some bad, and I don't know anything about. I don't even know what the show is about. But like this season 5, right? People are not happy with this. Season 5, part 2, right? This is the finale, right? This is the last season for these guys. Like the first 4 seasons have amazing ratings, and then you get to whatever they put out over the weekend, and it's not the best. Season 5 Stranger Things is the most disappointing shit I've ever seen. The last 3 episodes are so pathetic. You know what's crazy? This reminds me of You. I really love You as a show, but after season 2, it was just downhill. And I still watched it because I was so loyal to the show, but after season 2, it was like, there's really no more to the story. The final episode is not out yet. Okay, so they have 1 more episode. Okay, so I guess that last episode will define it. But yeah, Grey's is the one that I'm hooked on the most right now. All right, I think that's it. Do we have anything else crazy? We got this chart right here that just goes back to the point of what we've been talking about over the past couple of weeks. This is what Oppenheimer put out today. While markets are likely to continue to rise in 2026, valuations are now high across the equity complex in each region compared with history. I mean, this is really what we've been discussing, which is just like the multiple you're paying for certain stocks is not the same as it was in 2022 and 2023. Going back to that whole argument about financial nihilism, like if you degened into options at the end of 22, early 2023, you did really well, and it didn't feel like as much of a degen because we were entering a new bull market, and so maybe it might have been degenerate, and I participated in some of that with hood options, but it was actually really smart because these stocks were so depressed that we were entering a bull market. Now, if you're going heavy into options or like things that are a bit more speculative right here, the valuations of these companies and the momentum they need to continue. Hood going from 8 to 20 was already a tall task for them to complete. Now and they end up going to 120. Now them going from 120 to like 180 and buying those options even a year or two out, it's just a lot more work and a lot more things that have to go into your favor, given valuations have increased at pretty aggressive levels. Which just means I think we got to be a little bit more cautious going into next year. Doesn't mean get out of the market, but it does mean maybe don't go crazy degen into names that are super, super speculative that have already run like crazy. And that leaves you with things like Amazon that are relatively cheap. I think we'll probably get some of the other ideas out there for 2026. Guys, I can't call Steve. Steve is still at Steve. Me and Steve will be streaming a lot on Wednesday. Dude, I went into Steve is busy today. I enter the steakhouse and Steve is on a phone call. That's how busy this guy is. He did tell me something really exciting, though. I can't say anything about it. I probably just rage baited all of you guys by saying I shouldn't have even said that. But he did tell me something really, really exciting, like a life update. And we're going to have to see what happens in 2026 with his life. But look, he's busy, bro. Mondays are a tough day for him. And so I'm happy he got to squeeze in lunch. But we will be live on Wednesday for New Year's Eve. This guy's just constantly like, dude, his job is demanding. The amount of meetings that this guy is in, the amount of stuff he has to handle. Steve is not having a baby, but he did give me an interesting update on what he's thinking of doing with his life. And we're going to see what ends up happening. He's not, or I guess he's pregnant. No, he's not pregnant. Steve doesn't have any kids. I don't think Steve wants to have kids. Steve is more than happy having all of his money go into the market and not have to worry about kids. No, it's not quitting his job. It's not a promotion. It's different. It's different stuff. But we're gonna have to see what he can end up doing. Steve is launching his own cookie brand. I think Steve should launch his own cookie brand. I think he should. I think if he can get a right partner to make some cookies, he could potentially launch a cookie brand. Bro won the lottery. He did not win the lottery. But here's the thing. Steve worked so hard that even if he did win the lottery, he would still be streaming every single day because he loves this shit. Like, he genuinely loves this shit. He's not starting a pizza shop, although he should do that as well. Literally pizza and cookies. If Steve did that, that would be incredible. Is he traveling outside of New York? I've tried so many times to be like, yo, let's go somewhere. He loves New York. He hates it and he loves it at the same time. So unfortunately, we can't get him to leave New York. But at least that's why he's going to be at the New York meetup. We'll at least get him to be at the meetup here. Okay, I think that should be it. I think we should be done. Don't think we have anything else crazy going on. I don't think we're going to have anything that crazy for the next couple of days, to be honest. Unless this market starts bulling up. I mean, I guess we'll see on Wednesday how we end up ending out the entire year. But if we couldn't get a move on Friday, get a move today, I don't know if the Santa rally starts tomorrow. We need like a big headline, like an actual big headline. But we haven't got it yet. Steve and his milkman are engaged. That would be pretty funny. What happened to Tech Bros? Dude, the problem with Tech Bros is all three of us cannot do Monday nights anymore. And so the timing of Tech Bros has just completely been ruined for all of us. Like, for me, next year, I can't do nights at all. The only night podcast I'm doing next year is with Steve on Thursdays. Every other night podcast I've canceled because I just can't make it in the nights anymore. And then for Tanner, he gets busy. Roy gets busy. So the question is, when do we do it? And we just have no idea when we could do it. Because then Tanner streams in the middle of the day. And then, so maybe it becomes like a monthly thing that we do. But it has just become impossible to find a time. And so we'll see if we can figure out a time. But it's for the past month and a half, we just haven't been able to find one. We're not doing Technical Tuesday tomorrow. Again, we did it last week. There's literally no point at looking at charts tomorrow, guys. The market is closing for the year in 2 days. There's nothing you're going to see on the technicals tomorrow that is going to make a meaningful difference. That's why we spent a lot of time last week doing end-of-year charts, not just like weekly or daily charts. And it was Jason's thoughts on the stock for the end of the year. So we will get into it starting next Tuesday in 2026. But we will do a giveaway tomorrow. And so we'll be doing that after the close. Jason just tried. Did Jason go live today? Did he go live today to do charts on Monday? I have to join one of his Monday shows. Oh yeah, he did. He did do charts today. All right, cool. So then I'm going to link Jason's video right here. If you want to see his thoughts on charts for this week, you can watch this video right here. You can subscribe to that channel. And that'll give you some more thoughts. Yes, Tech Tuesday is happening every week next year. I mean, we've done Tech Tuesday pretty much every week this year. So that one is easy because that one's on Tuesdays and outside of earnings. Like Jason's free, I'm free. And so that one, the timing has always been perfect on that. And Tuesday has always worked for Jason really well. So Tech Tuesday should not have any time issues for next year. Many people encourage me to try streaming, but I cannot imagine being anywhere as interesting and entertaining as Amit. That feels like sarcasm, but I'll take the compliment. That feels like sarcasm, though. No, I think everyone, if you're passionate to try streaming, you should do it. It's just, I was talking about this with Steve today. Steve has what I like to call the it factor. You either have the it factor or you don't. And the it factor, realistically, when it comes to streaming, is just, can you talk? Can you yap for a long time and keep people's attention? That's it. That's really all it is. And that, there's a skill that is associated with that. There's also a level of consistency and work ethic, because the more times you show up, the better chance you have of getting into people's routines, which is very important. But then there's also the art of just your ability to pontificate about multiple ideas and let your mind be the stream of consciousness that can go into different directions. And that means a lot of times you're probably going to say some stupid shit, which it is what it is. But that also means you're going to allow yourself to have a foundation to communicate on a variety of different topics. And yes, exactly. Steve is just a wealth of knowledge. Also the consistency of being late so you can rage bait the chat every morning. Even though I was on time today, you guys just want to spam late for the hell of it, which is why I need to show up 5 minutes early next year so none of you can freaking spam that I'm late. But for me, what really helped was, again, debate in high school. Like Steve's older than me, so Steve has like a decade more of experience of things that he can talk about. And he's been analyzing stocks for more than a decade, so he can bring a lot of that knowledge to his communication skills. For me, I did a decade of debate, and that really helped me form the ability to articulate and communicate both sides of an argument, which is literally what we're doing all day. Bear case, bull case on everything. And I think it's really important to present those perspectives, because if you don't, you end up looking too biased, or you look too aggressively rooted in one opinion. And I think you can have a macro level perspective so people understand what your North Star is, which I think realistically for the past couple of years has been bullish. But that also means you don't ignore credit card delinquencies. And that's an interesting and important data to look at. And you got to bring that stuff up and be able to analyze it, or what the hell's going on with silver, even if you don't have a position in silver. I think that is what makes the ability to stream and speak about it more effective. Steve is 42. He's not 38. He's 42. So I think people should try if they want to try it. And that would help. Everyone respects what you do is very difficult for most, and unlikely and unliked role by most, but respected. Yeah, again, I just love yapping. That's the thing about it. The yapping part to me is the most fun part about this. Genuinely, I love the art of saying, all right, here's an idea. Let's break down what this means. And then I can provide my perspective on it. But I like the idea of breaking down multiple perspectives and reacting to other perspectives. And then there's obviously the fun of in real time news breaks, and you're breaking it down. You're seeing the stock go up and down and the reaction. That stuff is just the fun of it. But the actual communication of ideas is really cool. And so I encourage people to try. I think the harder part is getting distribution versus the content itself is it's hard to make the content, but getting it out there is the hardest part. AKA Amit likes hearing himself talk. No, it's true. I was saying this on Friday. I don't listen to the streams that much anymore, but like in 2024, I used to listen religiously. Like after the stream was over, I would just listen to the whole thing. And like, it'd be kind of weird listening to myself in the car, but like, I just needed to know, like, is this like hitting the right direction? Like, how does it feel? And so that is the art of the app. Is Dan Ives on CNBC? Let's see. Let's pull up Mr. Ives. Is he talking about his top picks? Oh, he is talking about top picks. All right, let's pull him up. Here's Dan Ives live right now.
Today, out with its top tech names to own into next year, among them Microsoft, Apple, Tesla, Palantir, CrowdStrike. One name that you're not seeing on that list, NVIDIA. Dan Ives behind the call. He is the global head of technology research, and I have to issue the biggest correction in the history of my career, which is now that you're in the light, that jacket is not McLaren papaya. It is, I would dare say, peach.
Look, I mean, I'll take both sides. Again, you never.
That vital correction now aside, why is NVIDIA not on your tech names to own next year, Dan?
Yeah, look, it's still, I mean, still in our Ives AI 30, a top tech name. But ultimately, to me, in terms of the five that stick out, it's really about how do you play the AI revolution on the hyperscaler? How do you play it on the consumer in terms of Apple? How do you play it on enterprise with names like Palantir, CrowdStrike, cybersecurity? Brian, I view it as like NVIDIA, there's only one godfather of AI. Jensen, we'll see him next week at CES. But the derivatives, the second, third, fourth, just starting, which is why we're so bullish in tech.
It's interesting, right? Even Ives, who's been the most bullish on NVIDIA, and it's not that he's bearish now, he's just not thinking the upside compared to some of the other names in the AI space is there for next year. Which again, doesn't mean he's bearish, but he's not pounding the table like he was over the past couple of years. And you know, I think NVIDIA is still trading at a relatively discounted multiple where it should be a pound the table, but you can see him rotating some of his thoughts to the other AI names that are out there.
You're in the Hall of Fame, Dan, regardless of color. Although Oscar Piastri just emailed me and mentioned that he actually thinks the color is a McLaren papaya.
Well, there you go.
With that said, what does
Challenge.
Palantir, what do their revenues need to be? They're going to do $6.5 billion of revenue next year to justify a $500 billion valuation, in your opinion.
Yeah. Look, I mean, to me, and we've talked about it a bunch, it's that it's ultimately it's the commercial business that I believe could ultimately be $2-3 billion when I see it playing out. I mean, I think when you actually do the trajectory here, I think numbers where you see for Palantir in 2026, I think they ultimately double over the next 3 to 4 years. And it speaks to the point. Super expensive stock today, but I just view it. I think it's $1 trillion valuation in the next 2 or 3 years as the AI revolution.
I love Palantir so much. I don't know if they can justify $1 trillion valuation doing 10 billion in revenue in the next couple of years. I don't know, guys. I don't know if that can happen. Maybe it can, but it's an aggressive multiple. Now, that does not mean Palantir has to go to 50. That also doesn't mean Palantir has to go to 450 and get to $1 trillion. So Dan putting that target on them, I mean, if it happens, I'm not going to complain. I just realistically, to get to that level of premium in the market, it's already trading at a crazy premium. So people might say, well, what if the premium just gets crazier? It's like, okay, what if it does? But it is quite the call to say it's $1 trillion in 2 years.
Plays out.
So everyone knows you for these marquee names. And when you go into CES, what I always look at are a portfolio of names that are going to shock people. Something that shows up. If you search anything with CES, you'll see robotics come up. What are the names you see you meet with everyone, both private and public companies? What companies are going to be there and have impressed you already?
Yeah, I think when it comes to robotics, I think maybe like a off the radar name that we're bullish, Serve AI. When you look what they're doing on robotics on the delivery side, what I view is actually true autonomous playing out. They'll be there front and center. And look, Steve, to me, it's really like the autonomous is going to be front and center here. It starts what Jensen's going to lay out, but this speaks to autonomous, robotics is going to be key to what I view as and that's one of the core names.
All right, Dan, talk to us about RPOs. This is not the run pass option. This is remaining purchase obligations here. Not something that I think a lot of folks were talking about too much until this summer when we saw, that huge OpenAI contract with Oracle, and a lot of investors were really excited. And, as an analyst, though, you see this big number, right? You see a $500 billion purchase obligation. How do you think about that? It's not in your numbers, right? But it helps kind of formulate how you're thinking about future revenue. To me, the market called BS on this with Oracle. And how do you think about it? Is this something we're going to see? Maybe some of these contracts not come to fruition.
Look, I think we sit here a year from now. I think actually one of the names that's going to stick out is sort of the renaissance that's going to happen in Oracle. Because to me, when I look at what's happening, where they play from the stack play, where they play in terms of AI revolution, I think investors are wrong to call out that this RPO, what I've ultimately, in a re-acceleration of growth, that's going to go from 18% to 30% to 45%. I think 80 and 90% of that gets done. So to me, would I take out 5% debt if I had 100% chance to ultimately do what they could do? Yeah, and I think that's what they're doing. I think that's why Oracle, to me, right here, it's a 78-hour upside, $15 downside risk reward.
All right, the risk reward certainly skewed to the upside. Dan Ives, always love seeing you.
Great to be here.
That's a beautiful.
Those are his picks: Tesla, Palantir, CrowdStrike, Microsoft, and Apple. No NVIDIA. Now, putting Tesla there above NVIDIA also is quite interesting because Tesla trades at a very aggressive premium. So he's imagining that autonomous comes into fruition next year and that supersedes data center revenue growth, or even if it doesn't supersede the revenue growth, which I really don't think Tesla's going to grow 50% next year. NVIDIA is going to grow 50%. But Tesla is going to get the pull forward on the premium even further than what it is right now, simply because of the ramp up. I think that's possible. It's not unbelievable to imagine that happening. I do think a lot of that should be coming from Optimus more than even the robotaxi, because that's where the numbers get really wonky in Tesla's favor if they do scale physical AI. But Optimus is nothing right now. None of the robotics companies have done anything meaningful in the past 2 years outside of show some fancy videos. So the idea that gets into full scale production anytime soon, maybe it does. And if it does, that's great. But if it doesn't, it's going to be the robotaxi or bust going into next year. All right, guys. I think that's it. I know I said that 20 minutes ago. What else is new? But I do think that's it. And we should be good for the day. We'll be back tomorrow. We'll do the giveaway tomorrow at the close. I think that's pretty much it. I don't think there's anything else crazy that we have to look into. S&P flat on the day. We'll see if tomorrow maybe gives us a chance. 2.3% we need for 7,000 on the S&P. And maybe we get there, maybe we don't, but it would be nice over the next couple of days if we actually get there. All right. That's it. Thank you, everybody. Appreciate everyone being here. We'll be live tomorrow again for the market open. The Substack will come out tomorrow, probably around 8 p.m. tomorrow, on 2026 strategies, updates, ideas, hedges, etc. And yeah, we'll have the hood giveaway tonight. I'll see if I win something again. I'll let you guys know. But we'll be back tomorrow and we'll keep going from there. Thank you, everybody. Appreciate it. We'll see you guys tomorrow on the market open. Bye, everybody. Have a good one.